Hello guys, welcome back to my channel, welcome back to this channel, welcome back to the Smart Money Forex Trader guys. In this episode, we will show you an entire advanced smart money trading strategy that will completely blow your mind, and we call this trading strategy order block in order block. Now I've done in my previous episode, I've done and described what an order block is, but in this very episode I'll be talking in details what an order block and order block is, the order block, break of structure and change of character, to fully understand this concept, of which all this has been explained on a separate videos in the previous episode. But in this very episode, we are going to combine each and every terminologies that has been explained in details into this very episode before executing a trade using the smart money concept guide. So the previous videos will be linked in the description. So let's start with the order blocks. Order blocks are the optimized demand and supply zones. They form when a large amount of money enters the market, resulting in a massive move. In other words, when there is an imbalance between the buyers and the sellers. Now, let me show you how to identify an order block. In a bullish scenario, the last bearish candlestick before the start of a heavy bullish move is identified as the order block zone, or the first week bullish candlestick before the big move. The same concept applies to the bearish scenario. Now let's discuss the concepts of break of structure and change of character. Imagine a trending market with a series of higher highs and higher lows. In this case, each of the highs and the lows are market structure levels, and the most recent higher high and higher low are the ones we monitor. Breaking the latest higher high to the upside indicates that the market intends to continue to the upside, which we refer to as a break of structure, BOS for short. On the contrary, if the market breaks the recent higher low to the downside, it indicates that the market intends to change its direction, which we refer to as a change of character, otherwise known as choke. The key point is that a break of structure is valid even if a shadow breaks above the previous structure level. But for a change of character, we certainly need a candlestick to break in close below the previous market structure. Now that we discussed the concept of smart money, let us dive into one of its important and top strategies. First, we analyze the market structure and point out order blocks in the higher time frame. Second, we zoom in lower time frame and wait for change of character or choke to appear and look for order blocks entries. For example, if we have pointed our order blocks in 4 hours, we look for entries in 15 minutes. With the same concept, if the higher time frame will be 1 hour, we look for entries in 5 minutes. Remember that this strategy is not limited to any time frame, but your entry time frame must be at least 2 times lower than your analysis time frame. So let me explain to you the steps of this strategy on the candlestick chart. Look at this 4-hour chart of the New Zealand dollar, which is our higher time frame. In the first step, we analyze the market structure and point out the most recent order blocks. Here we have an uptrend with this recent move with imbalance and break of structure. So this level is a perfect order block that potentially can get rejected and give us a trading opportunity. Now all we can have to do is wait for the price to touch the order block zone. In the second step, we zoom in on our entry time frame and look for trading opportunities. In this case, we are analyzing the market in the 4-hour time frame, so we zoom in 15 minutes. Now notice how we are in a downtrend in 15 minutes. So in the second step, we must wait for a change of character to appear. If we see no change of character, then we will have to trade in this scenario. So for having a change of character, we need a candle to break and close above this area like this. Like this is a sign that we are no longer in a downtrend and the market can potentially start to move to the upside. So next, we look for new order blocks to place our trades. In this case, this zone makes perfect order block since it belongs to the move of change of character. So this is how we execute the trade. We place our order a spread size above the order block and stop loss being a couple of pips below the lowest points of the zone. For the first TP, you could close half of your position. Then when the price reaches your 1 to 2 targets. This way, even if the price gets back and hits your stop loss, you are at break even. For the second TP, you can target the next level of structure in front of the market in the higher time frame, or you can also track down your profits, meaning that every time market makes a higher low, you reposition your stop loss a couple of pips below the lowest candle. But this is not all. We can look for further entries as the market continues to go to the upside. Every time market makes another order, we could place a new order with lower risk. For example, notice how the market has created a new order block here. So we set another order. Again, we have another order block, so we place another one. But this is optional and never try it before backtesting enough and gaining the required confidence. Also, keep in mind that whatever position size you risk for the change of characters, other blocks you need to risk half of the size of the following trades. Also, never have more than 3 trades open for the same analysis on a pair. For example, if you have a small account and are willing to risk 2% for the first trade, risk 1% for the second and third. This way, in the worst case scenario, you will only lose 4% of your capital. But in the best cases, you will earn far more profit, which is how you make a smart risk. I hope this wasn't confusing for you. If it was, let me show you more examples.
Yes, a simple task. Take a quick pause and click on this awesome button right there so we can stay connected. Turn on the bell notification to get more interesting videos such as this, and hit the like button so more viewers will get to see this video. Thanks. Now back to the video.
Let us look at the euro-dollar 1 hour time frame. Here we can immediately notice this impulsive move to the downside with imbalance and break of structure. So we draw our order block. Now that the price has reached this level, let's zoom in 5 minutes time frame and look for entries. Here we can see that we have already made a change of character since the candles have below this level. So we mark the recent 5 minutes order block and place our sell order. Now notice how price made a new order block. So without cancelling our first trade, we will place another one with reduced risk. Now let's see what will happen. So price came back and hit the stop loss of the second trade and triggered our first one and hit our target. In this case, we would lose a small percentage on the second trade and profit much more from the first one. This is a common scenario while trading the smart money strategy. You should not cancel your orders before the price reaches your target. Let us see another example on the Aussie dollar, which is partly different from what we had earlier. Here we have an impulsive move to the downside, so we draw our order block. Since this is a 4 hours time frame, we zoom in 15 minutes to find possible short entries. In 15 minutes, we have already made a change of character, so it's time to find a new order block and place short entries. But there is one problem. We want our stop loss protected above this swing high, but we cannot identify any other blocks here. So how do we place trades in situations like this? We enter the market with retracement levels. We open Fibonacci retracement and place the sell order precisely in the middle of 618 and 786 levels. We want our stop loss wider this time because we are early sellers. Since the swing high barely touched the 4 hours order block. Usually the market likes to hunt the stop loss of early sellers. Okay guys, I hope you can apply this strategy to your trading plan, but remember, knowing this strategy is not enough, and to execute it correctly you should test it on different currency pairs to find the best pairs for this. Also have a proper risk management plan to be safe on stormy days. That is it for this video. See you in the next episode.